All right. Good morning, everybody. August 17th, 8:35 a.m. Hope everybody is having a good morning. I wasn't able to do a video yesterday because I was actually in the middle of a crude trade, and then time got away from me. So, was a green trade, so that was good. So let's just get right into it. Yesterday, looking at the SPX daily here. Let's just look at what happened yesterday. We broke a key level here that I had on my charts at 4307. We broke that level, and then we hit the 200-day moving average right to the tick, right there. Literally smacked it and sold off, which is kind of expected, right? It's everybody's going to be everybody's target if you're long, right? That's pretty understandable. So pretty much normal, right? So now, like what I've been looking at for the last week or two is that the NDX and the SPX have not really been in sync. Usually they move in unison. What I mean by that is by the chart. Like usually if like we're coming up to a consolidation in the SPX, we're probably going to be coming up on a consolidation on the NDX. They still move together, but they weren't moving on the chart technically together. The NQ's a little, it's not as high up from the lows. So what happened yesterday is we finally are more in sync. So they can kind of, it puts a little things a little easier to read on the market. Let's go to the NDX. Okay. So now you'll see what I mean. I'm going to point it out. So now this is the key level resistance right here. 13542 in the NDX, right? We broke it yesterday, couldn't make a new high. Maybe ticked over it a little bit, sold off, right? So now both broke key levels, came back. So now we have this resistance in play, and we have a resistance level in the SPX. So now we're more in sync. So now if we're going to bust out of this consolidation, break this resistance, maybe that's when the NDX makes the move to the 50% retracement, and maybe it could tag its 200-day moving average. That's all yet to be seen. I'm just pointing that out. It's kind of like in sync because they've been not in sync. One's been breaking out, one's been bouncing, so now they're more in sync. So in tune, I don't understand. Not everybody's going to trade the NDX. I just use that because of the cash market. I trade the future, so like that prices. But like, let's just look at the Qs. So to give you an idea of levels, because the SPX, the ES, and SPY kind of have similar levels. So just to look at the Qs, so you can see my level here. My level was 329.9 was resistance. Okay, so now that was key, and I kind of wanted to hold it. Now this morning, obviously, we're going to go over what's happening. We've fallen below that a little bit, but that's the Qs. 329. The 200-day moving average is at 342. Let's see other targets that I had that I was talking about. The 50% retracement of the fib is 339. So those are all potential targets in the future. Just wanted to point the Qs out just because you might be like, well, what does that 1.4 something thousand in this mean for me if I trade the Qs, right? So I just wanted to bring that up. Those are the levels, just to show you that. Now, one key thing that I want to go over, that I keep wanting to go over every day, you want to make sure you always keep your eye on the 10-year yield. Okay. So 10-year yield's been catching a little bit of a there's basically maybe some quantitative tightening is actually happening here, because when this goes up, that means bonds are being sold. So currently, what are we at? 2.89. that's up 2.34% from yesterday, kind of almost gapping up, right? So that's bad for equities, especially tech. Okay, so that usually goes in unison together. This moves up, tech goes down. I'm not saying it's lock and step every way, but that's pretty good gauge, right? So yes, so that's that, right? So what I did notice though, this is going to go against us. We only see the Fed's balance sheet on Thursdays, after Thursday, but actually they were starting to buy bonds, even though they're supposed to be tightening. And I can show you that very quickly. Let's go over here. Give me one sec. Go to the Fed's balance sheet. Okay. Give me one second here. Sorry for that. There we go. So if you look at this balance sheet, on August 3rd, they started buying again, which would make the market go higher when they buy bonds. And they're supposed to be tightening, which means this should be going down, but they bought. Last date on here is August 10th. The balance sheet went up. Okay, I can't see what happened after August 10th. I'm only going to assume there's tightening now. It's going down. Just want to point that out. All right, now we're going to move over to the market profile, see where we're at in the futures right now. So let me do that. We're going to go right to the ES. All right, so let's look what we have going here in the ES in the overnight. Okay, so obviously let's a little recap of what happened yesterday. Um, Yesterday, you know, my in the overnight here, 45-degree line, which means short type beta location. Okay, then we opened up here, we tested down, and then we went all the way up. We went all the way up, and that's when we all know we came all the way up and hit that 200-day moving average, and then we sold off. Okay, we sold off, we closed here. Okay, we all know that happened. So what happened in the overnight? Obviously overnight opens, push up, and then we just sold off. Okay, so right now we're gapping down, we're gapping lower. Okay, price is right here at about 42.75. Okay, so what happened overnight? So let's just see, just quickly in the overnight. So what happened is when we opened, a lot of volume was here. You can see it. So overnight in the beginning of the session was getting long, and then once that volume that was all traded here overnight got breached, then it was a sell-off. Okay, it was basically a liquidation. And where did we come to, right? So we sold off, and we came right into demand zone. That's this green box, this big green box that I have here. And we caught a bid, right? Moved up. We bounced up. And we're right here right now. Okay, so let's talk about that. And talk about what other things is important on the screen here. Okay, so most traded price of the week actually moved higher to 42.97, which is right here. So we made value move higher, which is bullish. that's bullish. It's whenever you move value like this, the most traded price of the week, and you move it higher, that means that you're building more of a foundation that we can hold these prices. Okay, you want a strong foundation. That's one way to do that. You build out value. Okay, and also very important that I always talk about is value area. So value area high is, oops, that's a bad drawing. Value area high is this blue line up here. This section that is really bright blue is value area, and value area low is here. Okay. So without getting tricked by price action, because I know we're gapping down, we're still holding value. Okay. So picture this area here is value. That's where 70% of the trade of the last week has happened. Okay. So until we get out of that, that's going to tell me one or two things. If we hold it, if we hold value, okay, if we hold value in here, if today we kind of pump up and go back here and balance, right, then nothing's changed. Okay, yeah, we gap down, but if we come back up here, value's still intact. Okay, that tells you a lot. That says we're holding these higher prices, right? If we start to build value lower down here or down here, now we're taking value lower. Now that means that, okay, values starting to build out lower, maybe the tone is changing. So that's how you can always tell, gauge by value where it's changed, where the tone is. Okay, 70% of the trade happens in value. That's why it's value. That's considered fair prices for the market at this current state. So I just wanted to clarify that. Hopefully, if anybody had any questions about that, you can ask me, you can comment or whatever. Let's go to the Nasdaq and see what's happening there. Okay, same kind of thing, right? We know what happened yesterday. We moved higher, and now in this case, I didn't get to say it. I didn't get to say this, but this was the key level I was mentioning in my previous videos in the Nasdaq that I said I wanted that to break. Well, it broke, and when it broke, we kind of went up. We kind of went down yesterday, but we went up all the way up to here. Okay, so obviously now we're below it. Okay, so kind of a look above and fail a little bit, but not that bad. So Nasdaq, now this is very important. I just showed you the ES futures, right? The Nasdaq's price is right here. It is not technically gapping down right now. We're back into yesterday's range. Okay, so as far as market profile show me, overnight, ES gapping down, Nasdaq not. In futures, a gap down is only considered a gap is if you are lower than the previous day's high or low, not the close. Okay, in futures, you don't consider the close you're gapping down. It has to break the lows of yesterday. It has to hold it. It have to be down here. Okay, so in futures, you don't consider that a gap. So right now we're in yesterday's range, right? So it bounced into demand zone right here, and we popped out. That's why those demand zones are pretty cool, right? So that's one. So let's look at the landscape of the Nasdaq, right? Same premise, okay? Again, most traded price of the week for all trading hours is here. Nasdaq also moved value higher for the week. It moved it higher. That's bullish. Okay, that is bullish. This right here is still the RTH, most traded price of the week, which also moved higher. And I don't want to confuse everybody, but I track both all trading hours, which is overnight, and the real-time trading hours, as well as basically the futures market overnight and RTH. I track them both, so they're both important to me. Okay, so let's look at value, what I talked about earlier. Let's look at the value here. Here's value area high. Here's value area low. So in here's value. 70% of the trade has happened here. Don't let price action fool you. Current price right here. We're in value. Okay? We're in value. So I don't see much change. Yeah, it might have sold off, but we're in yesterday's range. Okay? In value. So until this changes and value moves lower, we're staying in balance, right? Another reason is that FOMC Menzies today. I don't know. I don't know how impactful that will be, just because it's kind of like after the fact of this. The CPI numbers were good after that meeting happened, so I don't know. I don't know how much bearing that meeting could have, because the FOMC, the Feds were not aware of the CPI numbers when that meeting happened, so I don't know. So let's go. Now that I said just what happened yesterday, what I'm looking at there, let's go what I'm seeing in the futures charts. Okay, give me one sec. Sorry about that little delay. I'm going to get you right now into the futures charts, okay? Let's look at that ES. Let's look at that ES. All right. So I'm going to zoom this in. Okay. So I'm just going to mention key levels, and if I'm seeing a pattern. So let's look at what I see and what I plotted, okay? So what do we have? So couple supply zones were made yesterday. This line also supply zone, right? And I have a demand zone here that's getting some pop here. Okay, demand zone came into it, popped out of it now. Okay, I'm just pointing that out. Okay, what are we looking at? All right, so this level obviously is going to be a key level right here, 42.66 in the futures. So you had longs here, these two candles, right? Two 60-minute candles, and now couldn't break that, came into the demand zone, and we're popping out of it, right? So this now has longs from here and here. So we break this level, we should get farther move down to here, which is another level, 42.49. Okay, that would be the end of the demand zone. So that's key levels, 42.49 and 42.66. Key levels to move down farther. All right. Now, what I'm looking as far as the upside, I don't see much because we hit the 200-day moving average. Okay. But if we were to come up here, I'm really interested to see if we break 43.14. Got shorts here. Short here, short here, short here, 6-hour candles, 3-hour candles. You know, I don't think at all we're coming back here. At all. But I'm just pointing out that's a key level. All right. Pattern wise, I'm not really seeing much. There is a trend line that I drew down here, that could act as resistance if we pop up to it. What else? Not really seeing any particular pattern per se. Okay, I mean, you can have an ugly head and shoulders, I guess you can call this is the shoulder, head, shoulder, and then this can be kind of like the neckline. That's kind of like it's not the best, but you know that's what I'm seeing. Okay, so that's my key levels. That's my, you can see my demand zones, my supply zones. Okay, got, that's pretty good liquidation there. All right, let's move over to the Nasdaq. So the Nasdaq actually had a little bit of a more of a prettier pattern setting up here. Very pretty pattern. Well, I'm not going to get carried away with pretty, but let's look at what we're looking at here. Okay, as far as key levels. Okay, so one key level. Let's go to the support. Okay, this level. Look at that, support, 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 and support. It nailed it again. That level is 13501 in the Nasdaq. If we come back here, okay, and we break it, there is not much support here. There is not much support here. We kind of ripped up here, and that's poor structure. Okay, so if we fall below this level, we could definitely wind up hitting this demand zone down here. Okay, so that's a level to watch, big time level. Okay, as far as resistance, we have 136.72. Okay, to come on back up in here. Like I said, I don't really see that's in the cards, but it could be if it came up here. That's just a level I'm gonna watch. It's also a supply zone there. This is also a supply zone from way back that came in and it tagged it. Okay, have also drawn a trend line here, and let's see if we can pop up to there and maybe get selling. I'm not sure, right? But the one thing I do want to show you as far as patterns, a little bit of a shoulder, a head, a shoulder. Okay, you could consider this maybe the neckline at one point, but I don't right now. But this I would consider the neckline of that. That's why it's so important. Okay, because if we break this line and like say we come up, I expect to go down here. Now I don't know if that will happen just because of FOMC minutes today at 2 p.m. I don't know. I'm going to show you the scenarios in a second of what I think will happen. And I'm open. I'm very objective. I don't have any bias. I never do. I always go by what the market's telling me. Okay. Really quickly, let's go into the Zoom charts of the market profile so I can get some scenarios for today. Okay. So we're over to the Zoom chart. Crude's about to open. All right. Let me get a little bit zoomed out picture here because I've zoomed in a little bit. So let me just make these a little smaller. That way we can see a little better maybe scenarios that I believe might happen today. Okay. Okay. So let's go with ES first. We're right here right now. Like I said, gapping down. So yesterday's low, and we're here, gap down. Okay. So right now everyone's short overnight. Okay. I know we opened here, but pretty much the whole thing has been short, and not a lot of structure here. What I mean by that is this is very impulsive selling here. There's not going to be a lot of resistance here if we come back up here. Okay. So, and now we'll see what happens is this is bearish because we're building value. We're building value down here. A lot of volumes being traded here now. Okay. So, like right off the bat, that is bearish. Okay, that's bearish. Building value. So I could expect, maybe a farther move, but let's just go over what the scenarios are. Okay, I'm just showing you, pointing out that pretty much all short from overnight, building value lower. Okay, we're not like ripping back up. Okay, but this is one scenario that I can see. So point out value again. Values here, values here. We're still within it. Okay, so until we break out of here and move value lower, I'm saying nothing's changed much. Okay, so if I go with the long scenario, okay, I could see us doing one or two things. I could see us opening, breaking this little level, coming down, right? And now this is the key of why I pointed out the volume that's here, this little volume. Okay, that means there's sellers that are accumulating here. Okay, what could happen is this: as soon as we rip up here, go here, and we can move right back to 42.97. Now, why is that? That's because all these shorts here will get squeezed. That's the beautiful thing about seeing volume profile, right? If that's a candlestick, I don't know that there's that many sellers down at the lows. I don't know that. Okay. But in volume profile, very quickly, I can see volumes here. We go above them. They gotta cover and they get squeezed. And then we come up here to the most traded price of the week, and I think we balance. Okay. That's what I could see happening for the bull case. Okay. And if we're gonna go bearish today, okay, we're gonna go for the bear scenario. I definitely think we can still do this. Squeeze those shorts, come up to yesterday's lows, come down here, come back to the overnight lows, balance, and go down. Okay? So essentially what happens is we squeeze the shorts overnight, come back into the lows, sellers come back in, and then liquidate the longs that thought we were going higher. Okay? And then overall balance scenario, we could very well just pop up, like I said earlier, come up, wait for it, and then wait up here for the FOMC minutes to come out at 2 p.m. Okay, that's what I see. That's what I see. The scenario's happening. Okay, is it going to be much different in the Qs? Let's see. Okay, again, it's pointed out: value high, value low. Okay, now the Qs, since I was just talking, has actually now gapping lower. So here's the lows yesterday. We're here. So that's a gap. We're gapping down in futures. Okay. And we might be violating the value area low a little bit, right? So that's telling me something, right? And we're almost violating this demand zone now. That's telling me we're a little more weaker, right? But until this gets breached and we really kind of find acceptance lower, then I'm still in the mind of value. Okay. Now that key level we're coming up to in the Qs, which is right here, is coming up to it right now. So if we do break it now in the overnight, I don't know how much farther we get, but if we do break it and hold under it and we start doing this, yeah, we could fall. Okay, we could, because that level is huge. It just has a lot of longs there. So that is pretty much, I gave you my bear scenario, right? Now we didn't open yet. We open at 9:30, so I don't know where we'll be when we open. So I'm just going off what price is now. So we also, if we're going to go to the bulls, because we're still in demand zone, keep that in mind. Okay. And again, we have value down low. We got volume low. People are shorting here. So we could get to the bull scenario. We could ramp up, squeeze those shorts, and come up here and balance, because this is the most traded price of the week in the RTH session. Okay. And we could wait for the minutes. All right. I'm not going to gleam too much into price action today, because the minutes, we could get a move early on and chop. So, we could just go up here, chop, 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 chop the whole day till 2 p.m. and then see what happens, right? We also could fall, like I said, I'm not sure if that's in the cards, but it could be. We're still getting buyers stepping in here. So, and if we this market's been buying dips. So, we very well could find this, like I said, in balance. So, I know that's not a ton of like stuff to gleam on just because the minutes are there. Um, the one thing I wanted to go over was the status of the market and why certain things are happening, right? Like, yes, we hit 200-day moving average, which is a big key, right? But also, what else did we, look at, right? What else can we look at to just say, oh, okay, maybe we're not going to rip up now, right? Maybe we're not going to rip up. So I just want to take a look at these major stocks, right, that everybody looks at, okay? And what's been happening? Meta, what are you doing? Nothing. Tesla can't break 940. It just can't break it. Because these are all levels these need to break for us to go higher. Okay. Amazon, beast yesterday. Look at that. Boop. But look at this level. 143. Let's call it 144. Where are we at right now? 143. We're right here. And it also hit its 200 day moving average. AMD, the 100 level is key, right? Right now we're under it. 98. Microsoft, this 291 level, right? We're underneath it right now, 289. I know it's getting repetitive, but I'm just making a point, right? Key level 191 in Nvidia. Can't break it. Google broke a key level of 119.69. It is not rocketing. Look at what it's doing. It's balancing. Netflix can't get above 250. It's the gap. The rocket ship has been Apple. I mean, we're like 180 is the all-time highs. I mean, we're at 173. Now, this is key, okay? This 171 level. We're holding above it still. We're at 172, okay? So that's the ace in the hole because that moves the market, okay? That and Microsoft. And then BA is the industrial eye track. This 171 levels key, and right now we're under it. So under all key levels right now, as well obviously you would expect when we're gapping down in both markets, okay? But I'm just pointing that out, okay? I'm just pointing that out. That is why. Look at that, right? They can't break their levels and hold them. That's pretty significant, right? And 200 moving day average says it all in the SPY, the ES, SPX, whatever you want to call it. And I'll lastly gonna go with an overall view in one of my favorite charts, okay? And just to show you the power of volume profile and what I think is the line in the sand for the market, okay? It's the last thing I'll go over. Okay, so let's go to the give me 1 second here. Last chart. And you'll see how key these are, okay? So let's look at this chart. This is the ES, okay? And I've shown this before, but I just love looking at this chart because it's really quick. Every blue profile is a week. Every outline profile you see like this is a month. And this on the right that you see here, okay, the white profile is the year to date. The orange is from a year ago, okay? So what does it plot for me? It plots the most traded prices. Okay, it plots me the most traded prices and just volume. What price has been traded the most, right? So we can see here, right? We can see that what are we doing? One time framing higher every month. Higher, higher low, right? 4122, 41 call 4122, 4120 is the most traded price of this year. Okay, that's why you got that hot pink line. Okay, so this, everybody, this right here, this is your bull bear line to see if the bottom's in the market. It's the most traded price of the year. Okay, it's a very key level. If we can hold this in the market, kind of like, and these are 4-hour candles, just to let everybody know. If we can hold this, then we're probably going higher. Okay, this is very important. And if we can't hold it, come down here, yeah, we're probably, I'm not saying making new lows, but we're gonna go back and to revisit some of these areas down here. Just wanted to point that out. Okay. And another thing I want to point out, I had in a video in the past how the most traded prices that I always talk about. So I talk about the most traded price of the week, and I talk about the most traded price of the month. Okay, how important they are. Okay, because when they match up, moves happen. Just give you an example here. Okay, this is great, right? So the biggest example you have is the most traded price of the year, and when we were balancing here, look at that move, broke out. Okay, look at these two. Now every weekly has the most traded price. So see these prices that have these, they're called pointed controls, volume pointed controls here. The white, when they matched up, look what happened. Boom, broke out. Look at this most traded price of the month here. We moved to here. So just, can anybody see this with candlesticks? You can, right? But I like to see it really quickly on a chart with my volume profiles. It's really easy to see that we move from balance to excess, or balance breakout, balance breakout. That's how the market works. We make a move, we rest, and we balance, and then we make a move. Okay, and how every one of these little, they're called high volume nodes, are just places where the market will probably stop because they stopped in the past. And it just shows me really quickly on a chart that I can go, oh, okay, we're coming up to that. Okay, now let's just take a look at the Nasdaq really quickly, just to show you that one. Okay, sorry if I'm a little long-winded, but I just want to make sure, kind of give everybody why I have this on my chart. Okay, so obviously the Nasdaq's one time framing higher, which is just making higher lows. And you can see here on this chart for this year, the most traded price is here, the hot pink line, and that price is 140.36, right? So I think if we are going to go higher, we're going to tag that. We're going to tag that. Look at all the volume here. We're going to stop there. That's our next move for the Nasdaq. If we hold these higher prices, that's the next move. All right. So, and again, you see it here. Look at this. This is this month's traded price, the hot pink line. Look at this week. This week is the most traded price. Look at that. What happened? Boom. What happened? The 2 weeks most traded price together, right? Moved higher. Look what happened again. This month's most traded price is in pink. And the weeks, this is the most traded price of that week. Look what happened. When they meet, what do? Went higher. So now what I'm looking for is, can we build out prices here? Like, let's say this is another balance area and we can hold it. Well, where are we going? We're going to break out to here. Doesn't mean we have to break out. We can make prices here and we can fall. But then where should we fall, right? Probably here, because this was the most traded price. Right now, this month is here. So that's how that works with divine profile. I mean, it works with the market and candlesticks, but a divine profile just lets you see it quickly. So I just love it because you just know where destinations are. If you're balancing, you're probably going back to here because that was the most traded price of the month. Where are we going higher? We're going to go probably here. It's the most traded price of the year. Gonna slow down the market. I'm hoping that makes sense. And if anybody has any questions, comments, please ask me a question. All right, I've been looking at these for almost 5 years, so I see how they work. And it just makes it easier for me to see. It just makes it easier for me to see on the charts. It doesn't mean you can't see them on candlesticks. It just means that I don't have to look at the candlesticks and go, wait a minute, is that balance? I just look at the volume profile. So, like I said, ask any questions. I'll answer them in the comments. Please subscribe. I try to do these every morning. Please ask any questions if you have any questions. Please give me a like, subscribe. That's all I'm asking. Good luck to everybody today. I don't see much happening after, maybe 11 o'clock, 11:30. So good luck to everybody today.